This is why I'm looking at it as my cherry ripe today, because you can just see Dogecoin's had just a horrific run. It's just been sold off, sold off, sold off. But Dogecoin's now back to its basing point back in 2024, 2023, 2022, and going back to 2021. This is a core zone. If it's going to bounce anywhere, it will be in this huge volume block, right? So and just this structure here just looks horrific in that it's being whacked down on the 20 SMA and the 10 EMA into this weird wedge. So if I'm just looking here, this kind of wedge down here, it's got a lot of pent up energy, and you can see just how massive this bull divergence is on the daily chart, and it will be on the weekly chart too. It's cracked that. And this big candle here is very enticing to me. I think this has a bit of juice here. And I wouldn't be surprised to see it somewhere back up its 200-day moving average, which would be at 0.09, which would be 26% move. If Dogecoin can do that, then immediately we don't even look at the price. We just go, okay, this is moving. This is interesting. Retail, there might be some participation here, or at least we see Dogecoin run at the start of every end of bear markets into a new bull market. And that is an important signal, because whales do repeatable things, right? They go and buy similar coins and do similar things at certain points when they think is the right time. It's at a psychological level, 2000. Really important. So if Ethereum breaks through 2000, this compression leads this right shoulder to burst up through. You've got the 100-day moving average through here. Again, moving averages are beginning to converge, and now they're starting to shift. This is what happens at the end of bears as well, and also at the top of bulls. You begin to see, okay, the moving averages now aren't really stacking on top of each other, giving you that clear downtrend or clear uptrend. They are now telling us they're trying to swap over. We've hit the longer term one, and now the shorter term ones are sort of now shifting back upwards. We now need to remake that. And this is part of the sort of the puzzle when you're looking at charts and understanding trends. But yes, ETH, if it can get above 2000, I think we're back in business and we're cooking. So ETH looks really constructive here. It's one to watch. Hi guys, hope you're enjoying the session of the altcoin bubble so far. Just a reminder, if you want the full version of this session where I cover Bitcoin, the macro, current events in crypto, as well as more charts, cherry ripe, one to watch, and danger zone, then make sure to become a newsletter subscriber by clicking the link below. You'll also get weekly content written by myself and the team. You'll also get access to mastermind videos, which Joe and I put together. Until then, hope you enjoy the show. Back to it. Part of my one to watch club today is Solana as well, because I think Ethereum and Solana are both the mainstays of the altcoin majors, and it's important to follow them because Solana will be more of that retail-y side. We talk about Dogecoin, but the real meme side, the sort of the sexy side, the flashy side, that's Solana. And it is looking like it's trying to put in a bottoming basing structure, but it's got a bit more work to do than ETH. ETH is a little bit higher, but also Solana's looking pretty similar in that it's challenging its 200-day moving average, be about 8-9% above. It's not that far away, but it's also grappling with the 10, the 20, the 100 as well. So Solana did get down to about $59 or 60, almost on the nose. Okay, danger zone. Listening on the pod, Zcash. I was rather bullish on Zcash over the last 2 weeks when we were in this structure moving higher and holding these moving averages up at around 500. As long as we were holding 500, and on the weekly, I think we were closing above the 10-week moving average. Yeah, so last week we had a bullish engulfing candle closed above the 10, but it just didn't have any sustainability to it. Bitcoin had a bit of a rollover too. Zcash had a really nasty sort of liquidation. I think I was trading it. It was up 530. I was up quite a bit. I didn't take profit there because I thought, okay, the weekly is pretty strong here. It's moving forward, but it just shows you how weak the market is when those sustainable breakout moves just can't sustain themselves. And in these trading environments, which are very difficult, you have to be very clued into your risk level. Always have a stop loss when you can move things back to break even, because you just cannot be sure that things aren't going to move higher and then straight back down and wipe you out. And it's problematic. In a bull market, that doesn't happen. So the shorters in this market have still been doing a lot better. However, the choppiness and the volatility, that's what chop is. You can have a breakout move and you go, sweet, I'm up in the money. I'm not going to take profit here because technically it doesn't make sense. It'd be too impulsive, but then it comes, but you should have taken profit, because then it comes straight back and rips your stop loss out, and you're like, well, what was the point of all that? And that's the horrible part of these choppy markets. But you can see on the weekly here that we're now beginning to start a opposite to what we had last week, which is a bearish engulfing candle.